Welcome back. The Trump administration pushing a revolution in automation and manufacturing, with President Trump also announcing he is rescinding the Biden-era global AI chip restrictions that were set to take effect next week. Rockwell Automation reporting a double beat on second quarter earnings this week with more than $2 billion in revenue. Sales were down 6%. Take a look at the stock this morning after a huge rally yesterday on the news. The stock this morning extending the rally after being up by better than 12% at the highs. Rockwell shares up another 1% plus right now as the company focuses on developing its workforce and moving production to the United States. Joining me right now is the CEO of Rockwell Automation, Blake Moret. Blake, great to have you. Thank you so much for being here.
Thanks, Maria. Good to be on the show.
Well, first, let me get your take on the quarter. What drove business?
Look, we had very strong operating performance. We had solid orders and shipments, margin, and EPS were all above our expectations.
Yeah, I want to get your take what the impact on tariffs were, because I know that, you know, when you've got the distributors worried about higher prices, they try to front load things. And where does that destocking or increasing stock sit today?
Yeah, so the impacts of tariffs in the quarter really were minimal. We've done a good job working with our distributors to make sure that we're completely aligned in terms of our approach. We're guarding against excessive pre-buys so that the demand that we're seeing is reflective of the underlying market. And we're moving manufacturing around. We've added additional manufacturing in the U.S. And when we do have to add price, it's with the full alignment of our distributors.
And you've said that cost cutting is a major priority for the company, and that remains. How do you balance that in terms of working with these distributors that need to get the product on the shelves now versus also keeping a watch on margins and that cost control priority, sir?
Yeah, after a lot of the volatility of the last few years with supply chain shortages and so on, we've worked hard over the last year to remove the inefficiency that's built up and really create a solid foundation as we return to growth. And as we said on the call, this quarter that we're in now, the third quarter, is when we expect to return to year-over-year growth, and to make sure that we can convert that to great performance is a real priority for us.
So how did you actually cope with the tight supply, 2 or 3 years ago, and how have things changed today?
Well, we've put additional redundancy into our manufacturing processes so we can build in multiple locations. As I mentioned, we're bringing additional manufacturing back into the U.S. We've also taken a good look at our supply chain, the components, the semiconductors, the mechanical components, and so on, to make sure that we're de-risking the sources of those components that are important inputs to our manufacturing. One of the announcements that we made yesterday was that we're expanding our manufacturing for mobile robots to our headquarters right here in Milwaukee, Wisconsin.
Well, that is terrific, and we want to hear more about that. I know that Rockwell is also doing so with automation. You're using robotics to fill labor gaps. You're improving worker safety, driving American efficiency and competitiveness. We're showing video here of Autom Motors, the robots in your manufacturing plants that you're announcing. They'll be producing these robots in Milwaukee as well as in Canada. How much of a factor was President Trump's luring companies to actually get manufacturing numbers higher in America?
Well, it is a factor. As people bring manufacturing back to the U.S., then it's no secret that to be as competitive as possible, those manufacturers, including Rockwell, are going to need to combine a really highly trained and engaged workforce with this advanced manufacturing technology. And Rockwell is really at what I would think is a unique position. We have home field advantage. We're the most common manufacturing technology in American industry. And so we're really well positioned to do this for ourselves as we continue to expand margins, but also to help customers.
And I know that margins have taken a big priority at the company. Tell me about that and the opportunity that perhaps you have to raise prices in this environment.
So we're looking to, as price, primarily to protect our profitability, not to increase top line. The underlying demand as manufacturers increase their manufacturing in the U.S. and around the world as they use advanced manufacturing technology, our focus is growing share, and that's what's going to increase top line for us.
Well, I mean, the manufacturing in America is so critical. You know, President Trump calls this a national security issue, sir. And from military to manufacturing, you're investing in America's veterans as well. You've got Rockwell's Academy of Advanced Manufacturing, developing skills and redeploying veterans across high demand. That's very important. Do you see this as a national security issue as well? Because President Trump has talked so much of not only raising tariffs as a result of the need to get manufacturing back, but it's also because of the national security implications.
It's so important, and not just for national security, but I think there's a growing awareness of manufacturing really at the vital core of the American economy. We don't have as many people directly involved in manufacturing today, but when you think of the additional services, the capital formation that exists only because of manufacturing and making things, it's really super important for the country. And again, the competitive winning hand is combining that trained and engaged workforce, and we're doing our part through the Academy of Advanced Manufacturing, as well as the technology.
I could see that. Blake, real quick before you go, we're trying to get some visibility on the macro story. You've got a great vantage point there in terms of manufacturing. Do you expect the U.S. economy to slow down later this year?
You know, I think there's been some delays in capital-intensive projects as people are looking for more certainty around their cost structure and around their demand, but there's continues to be optimism, and we're looking for growth. And I see that across multiple industries. When I look at warehouse automation and e-commerce and data centers, life sciences, food and beverage, home and personal care, those were some of the green shoots that we saw in the quarter.
But it makes sense when you're not sure in terms of the clarity on what it'll cost you, you put a freeze on the spending on CapEx. Is that what you're seeing?
We've seen some delays, but we have not seen cancellations, and everybody has plans ready to go in terms of expanding their base. And they're all interested, of course, themselves in growing share. And with the focus on manufacturing in the U.S., you continue to hear this growing drumbeat of announcements about people ready to go with additional investment.
Absolutely. I love it. Blake, it's great to have you this morning. I hope you'll come back soon. Thank you, sir.
Thank you.
Blake Moret joining us, Rockwell Automation.